Are you completely sure you understand why your Social Security deposit is arriving when it does, how much should be there, and whether you are truly receiving every dollar you have earned? Tomorrow morning, millions of Americans will wake up to see new deposits appearing in their bank accounts. For some, the amount may look ordinary. For others, it may be larger than expected, sometimes reaching figures close to $2,400. And for many seniors, retirees, and people with disabilities, that moment can bring relief, confusion, or even concern. I'm Sarah, and today I want to walk with you through what is really happening with this upcoming payment wave. Not with fear, not with exaggeration, but with clarity, care, and facts you can rely on. Because when your income is fixed and every dollar matters, understanding how and why these payments arrive is one of the most important forms of financial protection you have. The first thing to understand is this: Social Security payments are never random. They follow a strict calendar that has been in place for decades. Knowing exactly where you fit on that calendar can save you stress, prevent unnecessary worry, and help you plan your monthly budget with confidence. Many people assume that if their payment does not arrive on the same day as someone else's, something must be wrong. In most cases, that simply is not true. The Social Security Administration distributes payments using a staggered system tied primarily to your birth date and the date you first began receiving benefits. This system was designed years ago to prevent banks from being overwhelmed when everyone was paid on the same day. It may feel complicated at first, but once you understand it, it becomes one of the most useful tools for managing your finances. If your birthday falls between the 1st and the 10th of any month, your Social Security retirement or disability payment is scheduled for the second Wednesday of each month. If you were born between the 11th and the 20th, your payment arrives on the third Wednesday. And if your birthday is between the 21st and the 31st, your payment comes on the fourth Wednesday. This schedule applies to most people who began receiving benefits after May of 1997. Now, here is an important distinction that many people do not realize. If you started receiving Social Security benefits before May of 1997, you are part of what is often called the legacy group. Your payment does not follow the Wednesday system. Instead, your benefit is paid on the third day of each month, regardless of your birthday. That rule alone explains a large amount of the confusion seniors experience when comparing payment dates. But tomorrow's payment cycle feels different to many people, and there is a reason for that. This particular wave of deposits can include more than just a standard monthly benefit. In some cases, it reflects a combination of regular Social Security, cost of living adjustments, supplemental payments, or even back payments that were issued after corrections were made. When multiple amounts arrive together, the total can look much larger than usual, which naturally raises questions. When you hear a number like $2,400 mentioned, it does not automatically mean a new benefit level or a special bonus. Often, it represents multiple components combined into a single deposit. For example, the average monthly retirement benefit is currently under $2,000, but when cost of living increases, retroactive adjustments, or supplemental income are added, the final deposit can rise significantly. Let's talk about cost of living adjustments, often called COLA. These adjustments are designed to help benefits keep up with inflation. This year, the adjustment was modest, but it still matters. If someone was receiving $1,800 per month, a 2.5% increase would raise that amount by about $45. That becomes the new base payment going forward. However, if that increase was not applied immediately or was calculated incorrectly, at first, the correction may result in a back payment covering the difference. Those back payments can arrive quietly without much notice beyond a letter in the mail. Another possible factor is supplemental security income, or SSI. SSI is a needs-based program that is separate from Social Security retirement and disability benefits. Some seniors qualify for both. The federal SSI payment for an individual is just under $1,000 per month. SSI is usually paid on the first day of the month, but when the first falls on a weekend or a holiday, the payment is sent earlier. This can cause SSI and Social Security benefits to arrive very close together or even on the same day, making the deposit look much larger than usual. This is why timing matters so much. The real issue is not just when your money arrives, but whether you are receiving everything you are entitled to receive. Many people miss money simply because they do not understand how the system works or assume that what they are paid must be correct. While the system is reliable, it is not perfect, and errors do happen. One area that often surprises people is earnings record corrections. Your Social Security benefit is based on your highest 35 years of earnings. If there were mistakes in your record due to job changes, small business payroll issues, or name changes, your benefit could be lower than it should be. When these errors are corrected, the administration may issue adjustment payments, sometimes covering years of underpayment. Another important topic is survivor benefits. Widows and widowers may be eligible to receive up to 100% of what their spouse was receiving at the time of death, depending on age and circumstances. In some cases, people begin receiving survivor benefits early and later switch to their own retirement benefit if it becomes higher. That switch can result in a noticeable increase. Many people are not aware that this option exists. Now let's talk about taxes, because this is an area that causes unnecessary fear. Depending on your total income, a portion of your Social Security benefits may be taxable. This does not mean that the government takes 85% of your check. It means that up to 85% of your benefit may be counted as taxable income when determining your federal taxes. The calculation is based on something called combined income. That includes your adjusted gross income, any non-taxable interest, and half of your Social Security benefits. For individuals, if your combined income is between $25,000 and $34,000, up to half of your benefits may be taxable. Above that level, up to 85% may be taxable. For married couples filing jointly, the thresholds are $32,000 and $44,000. Not everyone reaches these levels, but it is important to be aware of them so there are no surprises during tax season. Two other rules that affect certain workers deserve careful attention. The windfall elimination provision and the government pension offset apply mainly to people who receive pensions from work where Social Security taxes were not paid, such as some government or teaching positions. These rules can reduce Social Security benefits, particularly spousal or survivor benefits. Many people do not discover their impact until they apply and see a lower amount than expected. Understanding these rules ahead of time can prevent shock and help with planning. Another key concept is the difference between your primary insurance amount and your actual benefit. Your primary insurance amount is what you would receive if you claimed benefits at your full retirement age. For those born in 1960 or later, full retirement age is 67. Claiming earlier reduces your benefit, sometimes by as much as 30%. Delaying beyond full retirement age increases your benefit by about 8% per year until age 70. This is why some people receive much higher monthly payments. They waited, and those delayed retirement credits add up. Working while receiving benefits can also affect payments, especially before full retirement age. There is an earnings limit, and benefits may be temporarily withheld if you earn above that limit. However, those withheld benefits are not lost. Once you reach full retirement age, your payment is recalculated and your monthly amount increases to account for what was withheld. This is something many people do not realize, and it often brings reassurance. Medicare premiums also play a role in what you actually see deposited. Part B and Part D premiums are usually deducted directly from your Social Security payment. For most people, the standard Part B premium applies, but higher income individuals may pay more due to income-related adjustments based on income from 2 years prior. The good news is that these adjustments can be appealed if your income has dropped due to retirement or another major life change. Finally, let's talk about delivery. Direct deposit is the safest and fastest way to receive benefits. Paper checks are still issued in limited cases, but they can be delayed or lost. If you're expecting a payment and receive paper checks, it is normal for it to arrive later than a direct deposit. If something looks wrong, you have the right to question it. You have the right to appeal decisions, request corrections, and ask for explanations. Keep records, read notices carefully, and never ignore something that does not make sense. Tomorrow's payment is not just another transaction. It represents years of work, contributions, and trust in a system designed to support you. Understanding how it works is not about becoming an expert. It is about protecting your stability, your dignity, and your peace of mind. As we move forward, remember this: clear information reduces stress. Knowledge helps you plan, and you deserve to receive every dollar you have earned. Take care of yourself, stay informed, and move forward with confidence.